Kia ora everyone, Chris Farhi here, Bayleys Insights and Data team. We've got Scott Campbell from our industrial team. Just having a chat about what's happening in the industrial market. Scott, how are you, man?
Yeah, good, thanks. Great to be back from a pretty hectic year last year and seems to be ramping up again already this year.
Yeah, no, it's good, eh? And mate, so we're in a pretty cool location. Talking industrial today, so right into the core of obviously some industrial property. So mate, whereabouts are we?
So we're at Sorter Logistics out here in Mangere in Tidal Road, and it's perfectly placed logistics hub really. It's right in the centre of the Auckland Inland Port and Auckland Airport, and it's got great access to major infrastructure that heads north, east, south and west. So yeah, a pretty cool subdivision that was created about 3 or 4 years ago.
Yeah, no, awesome. And this is a pretty epic building. Pretty busy at the moment, so you might hear a bit of forklift activity. There's also a like an owl that's being used to get rid of any birds, which is kind of interesting.
Yeah, it's pretty cool.
Yeah, and so Scott, figured we'd talk about a couple of topics today, but starting off on sort of the leasing market, you know, of interest to occupiers around the place.
Yeah.
Last couple of years, the market's been pretty mental, super busy, super tight. Is that still the case as we go into the start of 2024?
Yeah, we're expecting to see that continue. The developers really closed their books the last sort of 12 to 18 months because construction costs were so high, land values and yields softened a little bit, but we're starting to see that align a little bit more and come into normality. So we'll start to see the developers, the speculative developers anyway, come back into the market and produce some more product, which is needed.
Yeah, cool. And if so say an occupier is looking for space at the moment, what's their prospects for sort of quickly finding space in sort of a mid to larger size range? Like, is it still pretty hard work or?
Yeah, look, I mean, we've got vacancy rates still under 1% in some locations and blowing out in others, but to find stock that they really do need, it is limited. You know, you might get 4 or 5 different options, but it has to be located where they want. So we expect to see vacancy rates continue to be low for the short to medium term, but it's all about getting in line early and you know, looking 2 years ahead. Yeah,
cool. So that's probably the key thing, is just doing the early planning and starting well in advance of when you actually need the space, right?
Yeah, correct, yeah. And working with a real estate professional to sort out what your sizing requirements are and getting alongside a developer, or it could be a stabilised landlord that's got product coming to market which is being exited in the short to medium term.
Yeah, no, awesome. And then second question, right, a lot of tenants over the last probably 2 years have been taken by surprise by rental growth when they've come up with things like rent reviews and that type of stuff. Rental market's still moving, but you know, still growing, or is that starting to stabilise a bit?
Last 12 to 18 months, it's sort of accelerated, 25 to 30%. We are starting to see it plateau, and I think once we see these construction costs sort of align with land prices and investment capital returns, we'll start to see those rental uplifts sort of smooth out a little bit. Yeah,
cool. Yeah, so that one's interesting, right? Like 25 to 30%. Like, it's not casual rental growth that we've seen over the last couple of years, and it's definitely not your sort of traditional 3% growth that you see in some financial models. Jumping on to the investor side, right?
Yeah.
So probably the last 18 months, maybe 2 years almost, we've seen yields creeping up in response to higher interest rates. What's the outlook like this year?
Yeah, there was obviously there was a little bit of uncertainty last year, and you know, with the OCR hikes and interest rate increases, we think that that'll start to plateau and we'll start to see some certainty come back into the market. So it'll be good. It's good for the market to see some stability, which we think will happen, you know, probably from March through to the end of the year, and then some normality to continue. We'll probably start to see some more stock levels come back to the market. You know, the market was down in terms of
stock for sale.
Stock for sale.
Yep.
The market was down 35% last year. On the back of a downward of the year before as well. So yeah, we expect to see more volume come back to the market.
Yeah, cool. And yeah, that'll be cool to see a bit more volume, so I guess people can get more certainty around pricing as well, right?
Yeah, correct.
Yeah. No, awesome. Well, look, mate, thanks for coming out. Thanks for securing this cool location. Real cool to get out into the market. And
thanks. And let's do it again soon.
Yeah, sweet. We'll see you guys next time. Ciao.
Cheers. Thanks.